Okay, guys, welcome to the training room. My name is Sol. Glad to be with you. First, as always, we're going to be, analyzing and working on live market conditions. So anything we do here is not meant to be a buy or sell signal. Please, if you're going to be following along, just it's on your own responsibility. I just want to show you some techniques that you can apply to your own individual situations. And second, please change on your chat settings so everyone can see what you type, not only host and panelists, but everyone. That way, it's more interesting for everyone. And let me share with you something we want to change a little bit the concept of the trading rooms on Wednesdays. We want to maybe switch or just tune it a little bit to a more class where we, demonstrate something in practice, something related to risk management or to trade management or to psychology or something, but of course apply to the trading world. But that way is this would be contents that more and more traders can connect with and apply. So today I'm going to try to demonstrate a little technique which is called scaling in. And for that, I will need a volunteer from the chat. So who of you is interested on be, the trader who helps me with this little experiment? Just type a Y or tell me I am or something, and I will need one of you to help me. Barry, thanks. Barry, where are you from? Just to everyone so we can. The US, great, Barry. Barry, what I want to try to explain a little bit, it's the way we enter into the market. Usually we do an analysis on the market, and then we decide on direction, and after we have the direction, then we enter the market in that direction based on the indicator or our analysis or key area or key level or whatever. And of course, that approach to trading is a very valid one. And in that way, you rely heavily on your statistics being positive and profitable over time. You need to keep a high win rate and a high risk reward ratio, ideally. But there's not a lot of managing on the way we enter the market. So what I would like to try to demonstrate, and it would be just an experiment. I'm not sure it's going to work. We're going to try it live. Is to try to apply a technique regarding the direction in the market we wanna trade. Okay, so we're gonna do no direction analysis. Okay, I'm not going to choose if I'm going to go long or short. I will ask Barry to tell me if the next trade I'm going to look for is going to be a buy or a sell trade, and then I will try to give an example and a live demonstration of how we can split our entry lot size into different entry points, all valid entry points provided by the market in real time, and hopefully we can get some insights from it. Okay, of course I'm going to lose, okay, to give out on the edge of doing a prior analysis on what direction I want to go. After Barry tells me what direction I'm going to be trading today, afterwards I will tell you what direction I will be trading. Okay, but I will stick to the direction Barry tells me, and I will try to get into trades only in that direction, and hopefully the technique will give me an edge on the trade. Hopefully, very profitable. But if it's not working out, the same technique to help me to mitigate maybe loss or risk, and I will try to exemplify that. So this technique is something you could use on all time frames, and this would work for, you know, swing trading or whatever, just for you know, just for demonstration, I will go to lower time frames, to the 5-minute charts and 1-minute charts, so we can have a setup in real time, and we can try to demonstrate this kind of technique of entry into the market. So Barry, why don't you tell me, you know, we're on the Euro USD 5-minute chart. Okay, this is all the information you have, and just tell me if you want me to take you know, a buying position or a selling position. Just type it in the chat, and then I will do an analysis based on that. Okay, so I'm gonna be trying to sell the Euro USD. Okay, now if I'm gonna be, okay, this is all the information I got. I want to risk, you know, more. I don't want to risk more than, let's say, 0.5% of the account on this setup. Okay, and if I was, yeah, Martin, I will stick to the Euro USD just for the exercise. So if I want to go short, first I need to decide where am I getting out of the trade. Okay, when I need to give up on trying to short the market. So possible exit points. Okay, my stop loss points. I see 3. So the first one would be here. Okay, above this pivot point, that would be a possible entry, exit zone. Another exit zone would be here, and last exit zone would be, okay, up there. Now I see this one kind of tight. Okay, so for this scaling in technique, this is too tight. Okay, so I'll just get rid of this one, and then I'm left with about 23 pips of loss, or a 50 pip loss. So a 50 pip loss is also a very large loss. So I guess I'll just stick to this stop loss. Okay, it's just an exercise we're gonna do. So I'm going to define right now that all the positions I'm gonna be you know, entering the market, they all need to stop, to end there. Okay, of course I have some things to back up on that decision. I have a little supply area there that's my, you know, my line of defense. If that breaks up, I just want to get out of the trade, because next stopping point is all the way up here, so that's far away. So okay, so I have this is a bootcamp account, so this is a 25K account. I want to risk 0.5%, which is 125. Let me just bring the $125 divided by 25 pips of risk. So my max, every pip should be 5 lots, which is half lot. Okay, 5 mini lots. So if I take one sell, okay, right now, half a lot. Would you explain that? Yeah, Barry. So price is right here right now. My stops would be there. So if I take an entry right now, if I take an entry right here, and my stops is up here, that's a 25 pip risk. So $125, which is what I want to risk, divided by 25 pips, that's 5. Okay, $5 per pip, which is, you know, 5 mini lots. So if right now I go ahead and sell 5 mini lots, and my stops are up here, that I would be risking the 125. Okay, but the whole idea of scaling in is to divide, okay, this amount right here into more, okay, into little pieces, so I can allocate around this area. So instead of going right now and selling 5 middle lots, I'm going to be taking wait, what happened to the camera? Can you hear me? Can you still hear me? Yeah, okay. So instead of taking a 1/2 lot trade, I can take 5 1 middle lot trade, or I can take 10 5 micro lot trades. Okay, so that's what I'm going to do. I'm going to trade up to 10 5 micro lot trades, okay, which is the same risk as taking, the full half lot. And I'm going to try to trade all around this area from where price is right now up until my stop line. And I'll try to get into better and better entry points. And along the process, I'll try to make some money. If the market eventually, I don't know if the market is going to turn down. If it does, then I will make some money. If it just goes straight up, I will lose money. But if on the process of going up, it does some up and down movement, I will be able to make some money, okay, some scalps, or to fix some of my position. So Barry, do I wait for the price to reach the supply zone? That's an option. Okay, now I need to decide where am I getting in. Okay, so it's not just blindly getting in. It is just, now is the moment to decide how I'm going to get in. So it can be supply area, or if I see a key resistance or a candlestick patterns, or okay, we'll see it live depending on what the market show us. And this is a great question, Tang Yunam. Is this martingale strategy? Absolutely not. Okay, this is very important to understand, because I have a setup. Okay, I have predefined risk of 0.5%, which is what I would do anyways. Okay, instead of taking my 0.5% risk right now in one single entry, I will spread out my entries. Okay, my 0.5% risk in, I will spread it out across time and price. Okay, but I won't be taking more risk than I should, and I will not be doubling up my sizes. Okay, and I have predefined stop loss, which is right there. Okay, so it's very important to not misunderstand the scaling in technique with a martingale strategy or martingale system. Okay, but it's a great question. Martingale would be doubling up, which is not what we're going to do, and we're going just to split my predefined risk, which is 0.5%, into little pieces. Okay, I hope that makes sense. Okay, so from the 5-minute chart, I have what seems to be a kind of a resistance right there. I have the supply zone up there, and kind of that's it. Okay, so that's 2 entry points. So remember, I have 10 positions. Okay, I can click the sell button up to 10 times. Okay, that's my limit. So if I just do it here and here, that would be maybe 5 and 5, or that would be maybe 4 and 6, or 3 and 7. Now, if I go to the 1-minute chart, maybe I'll be able to get extra information. Okay, which I not really. Okay, I just have this. So let's just take the first one. Okay, let's see where that takes us. Okay. Okay, let me go back to the 5-minute chart. Okay, remember, all my stops need to be there. Okay, at the same point. So I have 10, I have nine left. Okay, that's what I got. Now I need to wait. I need to wait for price to either come against me and take profit. Depending on how it gets there, I might take profits there, or I might bring my stop, my take profit even further down. Remember, I didn't make any prior analysis. Okay, I'm just going short because Barry told me to go short. That's what I'm going to try. I'm trying to demonstrate how lot size risk or lot size management or trade management sometimes is more important than direction. Okay, not always works out. You know, the prior analysis of defining direction would give you that edge that I don't have in this little experiment. So let's just wait and see what market does. CBUSP, while you don't double up, do you add more lots per entry point as you get closer to the supply zone? Yes. So the whole idea is all my stops will be at the same price. Okay, so if I get it in here, if I take some trades at this level here, my stops will still be there. So my distance to my stops will be shorter than this one, the first one I took. So if I have 9 clicks left, correct? I have 9 trades left. So if, let's say I will use 3 here, okay, at the resistance level, and then I will have 6 left, I will take those 6 up here. And if at this point, the market, if at this point, okay, I'll place maybe 3 at this level and 6 at this level. So if at this point the market turns around and goes down, now my maximum allocation is at my best entry point up here. Okay, does that make sense? And all my stops, they need to be at the same level. So if everything goes wrong, this first trade, this trade, and this trade goes to my stop loss, I'm still risking less than my predefined risk, which is 0.5% of my account. Does that make sense? Great. Okay, so thank you, Nam. Did I manage to explain the difference between a martingale strategy and what I'm doing here, which is just scaling in? Fantastic, thank you. Okay, so remember, this is just an exercise. I did not do any prior analysis, so I'm just trying to prove the technique. Okay, the scaling in technique. I'm not sure this is going to work out. Okay, many of you, maybe you trade based off supply areas. Okay, so even inside a supply area, you have different valid entry points that's to get into the trade. So instead of taking all your risk on one single entry point, you can divide your risk on different entry points. Or if you trade based off I don't know, pullbacks. Okay, if you're used to trade, let me try to draw this. Okay, if you used to take, okay, if you take pullbacks, so you wait for a trend, and then you wait for the market to go up. Okay, that's not a good drawing. Right. So if you're waiting for the trend and the pullback, once the pullback goes on, you can start taking shorts, and once you have confirmation that the market is actually turning around, then you can add more trades. Okay, so almost every strategy or every setup has multiple and valid entry points. That's the key, valid entry points. So the idea here is just to try to, instead of committing all the risk you want to commit to a single trade, just to divide that into different entry points. Okay, and I guess that's the whole idea. Okay, now we really need to wait for market to do something. As we get new information, of course, we can adapt, correct? Now we see we're kind of stuck in this little range. So for this specific trade to work out, we need the trade. We need this breakout. So let's just wait and see. It has tested it a few times, so probably at some point it will break down. Let's just wait. Okay, so let's just remember I'm limited to 10 clicks, and I've used 1. Okay, so I have 9 left. And I need the market to either go up or to go in my direction. And today, guys, we have also like time to speak about just general Q&A questions related to trading, of course. So if you have anything related to trading you wanna ask, this is a good moment while we wait. We really need the market to go either against us or in our direction. Maybe as price goes higher, is each entry larger size but same percentage size? Yeah, so my percentage risk, I already did the analysis. I already defined that I want to risk only 0.5% of this account. So I wanna risk $125 maximum, and because all my stops will be there, I can risk up to half a lot. So all I'm doing is, instead of this entry going with my half a lot, I'm just splitting that into 10 5 micro lots. So that's all I'm doing. Mariana, my platform does funny stuff. When I try to use depth of market to take a position, kind of takes the stop loss and price as price, not points. Do you know how to? I'm not sure I understand what's the. I use the depth of market all the time. So just, if I understand your challenges, these are in points. So 25, 220, 250 points. This is 25 pips. So maybe that's. What is target profit for the position based on risk reward and something else? Yeah, so all the risk reward and the targets, it's more related to the strategy and not the technique, the scaling technique. So you know, if I were just now doing some analysis and I have convinced myself to go short, maybe I can tell all my targets will be down here. You know, that would be my scalp target. The only thing what I think is going to happen here is the market to go up. Okay, but we want to try to demonstrate the technique regardless the direction. But if I was thinking to go short, then you know there's this kind of tiny demand on a 1 minute chart, so that would be a scalp target on a 1 minute chart, and then you have the scalp target on the 5 minute chart, which is, you know, these lows in case the market will push there. And if you decide to you know, if we suddenly see the market going very aggressively in our direction, then we can consider swinging this trade and taking more larger pips. But the target needs to be based on your strategy, not on the technique. So sometimes you use like 2 ATRs or a certain indicator to dictate what should be the target. Okay. Also, in case the market drop, rely from the fast entry, it will be vice versa return. Yeah, I'm not sure I got the question, Farah. How is the best way to scan the market to find ideal setups? Really, I don't know. It really depends on what you're looking for and what you define as ideal setups. That's something you need to, you know, you depends on your system to see what's an ideal setup for you. And then you can go, you know, across all pairs and all time frames, but I don't have a specific answer for you. Isaac Rivera, great question. Is it possible to have negative risk reward but high win rate and succeed? Absolutely. We have many traders that have negative risk reward, usually scalpers. They have negative risk reward and, you know, above 80-85% win rate, and they're very profitable. So depending on your strategy and your trading style, I guess, you need to know what your ratios should look like. So usually for scalpers, you have a negative risk reward, but you have a very high win rate that keeps you profitable. Swing traders have kind of a 1-to-1, okay, or above, and position traders, they have very few setups, so they really have to have a really high risk reward. Ira, any option to use MT4? No, unfortunately, MetaQuotes had stopped supporting MT4, so we don't have more control over the platform. All the systems we run, you know, in the back end, we cannot run them anymore on the MT4. So no, only MT5. Okay, guys, let's try to move on with our little trade here. We're really stocked on this little range on the 1 minute chart. So let's see if we can get the break all the way to the tops. Okay, so I said I would, whoop. Okay, remember I have 2 or 3. What do we do? So let's use, go a bit higher, a bit more. I want it to go a bit higher, so I can place 2 more. Isaac, thank you very much. Okay, now with new information, of course, we can do some adjustments, correct? Because now we'll go to the 5-minute chart in a second once I'm able to place the extra trades. Okay, so I have 1, there's 2. Now place 1 more after confirmation. So now I want to, now for the third one, I want to see any kind of confirmation. Okay, that was like a without confirmation. I'm just relying on this resistance to hold. Now let's see if I get a fake out or something to tell me to go short again. Okay, now look what's happening down here. Okay, look how. Let me go to the 5-minute chart. Okay. Okay, even when my bottom entry was, was out of time. Okay, went against. The simple technique is just helping me balance my account. Okay, now I took I believe it was a 3 pip. Okay, so I took a 4 points. Okay, a 4 pip win. So I could choose, if I was heavily sized, I could choose to take this one off. Okay, to just take it out, balance, and to just leave this one on. You know what I mean? Okay, I know we're working on the 5-minute chart, so everything happens so quickly. But if I'm 4 pips up, I could chosen to take that one off to be at break even, and to leave that one on in case that goes in my favor. Okay. Okay, now of course because of all the talking, I'm just not acting as fast as I should. Let's go back to the Jude, does the commission just write out profits when using such small lot size? The lot size is, again, the lot size is the finite lot size will be same lot size that I wanted to be using in the first place. Okay, my goal is to get all the way to the to this. Okay, to half a lot. I'm just doing that slower. Regarding the profits, you're right. Okay, taking small targets. I'm doing that because we're working on a 1-minute chart. But if you can apply this to the daily charts, the hourly charts, and instead of taking 3 or 4 pips of profit, you can go ahead and take 20, 50, 100. Okay. Okay, now let's go. Okay, let's see what's going on the 5-minute chart. I do a little new analysis on the 1-minute chart. Right now, it looks like this trade right here is kind of far away. Okay, so I'm not sure the market is going to get there or not soon. We have about 20 minutes left. But I already took a tiny profit, and I have now 8 clicks left. Okay, so I will use my 10 clicks. I will use all my 10 clicks in the supply area, which is up here. So I need to wait for price to get to that area, and I have 8 clicks left. But right now, those clicks will have around 8 pips of risk. So let's just change it here. Yeah, Peter, that's what I'm doing. All my stop losses will be there. Okay, that's it. Now, if in case that happens, and you will want to, okay, and something tells you to keep selling this market, you can start over. Okay, and you can then keep shorting and placing your stops above that or something. Remember, I'm just going short because we picked a volunteer and he told me to go short. Okay, it's not an analysis or a direction I chose. I just want to demonstrate scaling in techniques. Okay, and how can they help you to manage your lot size and your risk. Barry, do I hedge? Sometimes, very rarely. I don't really. No, I'm fine when I get into a hedge. I hedge if I need to, if I have a trade on and I have a meeting on something and I need to just hold whole time, then I would hedge, and then then to give me some time and go back to the market and remanage it. But for me, when I hedge, I find I get stuck in one of the sides, so I'm not usually hedged. Now, another good exercise we can do, and it's always very valuable, regardless the trades you have already on, hide those and then reanalyze. Okay, right now I see the break of this resistance. I expect, and I need to be ready for a pullback to that area, and then a continuation higher. So once, if that happens, I should not be scared or upset or something. And if that fails, well, that will be good for the trades I'm taking right now. Okay. So right now it's at the breaking point. It could turn around and go higher towards the supply zone. I like the fact that it's not going very aggressively towards the supply zone. That gives me a hint that it might get there and actually do the movement I need it to do. Let's bring those back. Andy, if we pass each challenge on bootcamp, the risk valuation will be reset to be 3 again. Yes, so you have 3 per stage. Okay, what's going on here? Let's see if we can. Let's see how market behaves there, because this was a tiny demand, it already reacted. But if it tests again this level, it might push a little bit lower. And of course, if you if the market goes in your favor, and you kind of understand this is like a key level, you can bring your stops to this area. Okay, once you get confirmation that the trade's going in your favor. Okay, so let's see how it behaves around that area, because that's where bulls were active last time. So let's see how they react right now. When the 5-minute chart is kind of compressing towards the supply, and the setup of the break and retest has failed, so it might continue lower. If you did your analysis on the Euro USD, what would it be like besides this method, preference swing trading? So I usually go only for key levels. So depending on the time frame, I do look at the overall bias and what's happening on the dailies and what's happening with the dollar index and how's the euro, how's this pair behaving, and then I mark usually on the hours, on hourly I mark key levels. So I have maybe this one right here, this supply, this demand, and I trade based off those ones. And that's what I usually do. Let's see. Okay, nice. I like that candle. Let's see if we can see a push lower, because if this breaks, then we should see prices all the way down. And then we can decide if we take this one off or we stick to our initial analysis. Okay, let's see some continuation, or if the market, or if the buyers reject it. And look all the time how now I have this flexibility of taking profits, taking losses. Okay, I can if everything's going wrong and I don't feel comfortable with the analysis or with the lot size, right now it's very small, but if you feel comfortable with that, you can always reset. Okay, take the losses, take the break even, and reset and look for another setup. Okay. The reason I suggested for sale is the overall trend using daily or weekly chart. Is that the valid reason? Yeah, Barry, that's great. I'm happy with both sides. The only thing I do when I choose sides, I try to adjust my expectations about the market. If I'm going against the overall trend, I just try to scalp and go for lower targets. If I'm do some scalping, if I know I'm going with the trend, then I will try to swing. Okay, to let my trades on for longer. You mentioned you don't usually trade the 5-minute chart. Which one do you trade mostly? No, I do trade a 5-minute chart. Most of my trading, I guess, yeah, a lot of my trading is on the larger time frame, so 1 hour and above. But when I do have time to sit in front of the charts and actively trade, then I'll go to the 5-minute chart and 1-minute chart. Okay, like same as you see here. The only thing is, lower time frames require you to sit in front of the charts and follow the trend, follow the trade. Okay, so again, what can we do now? We can take this one for break even. Okay, we can leave that one on and maybe bring our stops, okay, to here. We can do a lot of times. We can wait, see if this level is going to finally break, and if that happens, that might be a strong break. Okay, so all I'm trying to demonstrate here is the flexibility you have once you divide your entries instead of just going, okay, one on. If you remember, this was my initial entry. Okay, so if I have entered my full allocation, my full risk on this one, I would be right now, you know, I would have held all that drawdown, and right now I would be very, very anxious and maybe trying to take the loss or the break-even trade once the trade is you know, at a break-even point. But when you divide your entries, then you can, you know, you can kind of, you know, play with your entries. Okay, so let me see what's happening. Yeah, that probably that support is, I don't know, it's looking strong. So I don't know, everything is valid right now. I can take this, you know, this first entry for a break even and just hang with this one. There's no right or wrong decision right now. Okay, now let's, okay, just to wrap up the session, I guess, let's just close everything. But actually this might break down, and if we do break this, okay, we can do something like that. Okay, if this is going to break, maybe our first entry, we can just scalp it and leave the first one for a lower target. Okay, guys, I think we'll wrap up here. I think so. How can we apply this concept to larger time frames? How do you say? Yeah, so guys, same thing you can apply on larger time frames. Okay, so if you go to the hourlies and you, I don't know, you have I don't know what every one of you how you all trade, correct? I don't know what's your strategy or what defines your entry points, or if you use indicators or not. I just know that most strategies have more than one single entry point, a valid entry point. So most cases you have like a without confirmation and with confirmation entry point, or with less confirmation and more confirmation entry point. So instead of going just, you know, all your lot size all in on one trade, on one entry point, just split that into different entry points. That's it. And you can do that on all time frames, dailies, whatever. I just wanted to go to the lower ones so we can see the whole exercise from the beginning to the end. But that's something you can apply to all time frames. Okay. Okay, now let's close these ones here. So let's just recap what happened. Okay, look at the trades. We started out, and we'll wrap up. Just wanna enter because we're getting to the end of the hour. What's the? Okay, so our first entry was here. Okay, we were thinking that the market would drop. Okay, if we've just taken that trade, we would be stocks. We would be stocked about almost 1 hour, 1 hour now, only to be at break even. Okay, prices at the same level from the beginning of the session. So instead of that, we enter 2 times up here, and even with the market going sideways, okay, now of course now as we close it breaks in our favor, okay, but let's just suppose this keeps going sideways. These 2 trades or these extra trades helped us to at least to get a little bit of profit of a setup that otherwise would give you nothing, correct? Now, because we're about to end, we're not holding this for longer, but you see if this is going in your favor, the better, okay? So you have 2 and this one going all in your favor. Instead of having your full risk going against you or in your favor, you have better entry points. I hope that makes sense for most of you. I know it's might be a bit complicated or advanced, or but with some practice you can use this. So just make sure you you practice this before going and applying it on your live accounts. That's it, guys. I think we'll wrap up the session. So thank you very much, guys. And tomorrow Ruben will be doing a trading session, and we'll see you next week. Okay, bye bye, guys.